Hello, my friends. Steve Kilo here, Gary Mcgowan Real Estate Team, Keller Williams, and I have Meenu here. Meenu Khanna from
Northwood Mortgage.
Northwood Mortgage.
Yes.
Yeah, so you know what? I brought her on today just to talk about what everybody's probably wants to know is like, what do I do to get a mortgage in this crazy climate, right?
Yes.
So first, just get comfy.
Yeah.
And tell us about yourself, Meenu.
So I'm a licensed mortgage professional, and I've been working with Northwood Mortgage.
Okay.
And I provide mortgage advice. I'm a mortgage agent, not a mortgage broker.
All right.
But I'm working with clients to help them get their mortgage.
Oh, cool. So you're situated where, though?
We are at Woodbine and 14th.
Okay.
In Markham. Yeah.
And you're pretty much mobile.
I am mobile, yes. I can work from anywhere.
Yeah.
I can go to clients' home and offer them advice there or meet them anywhere they feel comfortable.
How about Sudbury?
I haven't gone there, but if there's a good business, I will there.
It's a good road trip.
Yes, good road trip. Okay. Summertime, I can do that. Winter, maybe not.
So, I had this crazy thing where mortgages are getting so expensive to get or hard to get because you haven't saved enough money, right? Look at this poor guy. Like, how much money do you need to save now to get a mortgage, right? I thought it's very difficult. Anyways, bye-bye, Piggy. So anyways, what are the steps in obtaining a mortgage people need to know?
Okay, so once a person has decided that they need to look for a mortgage, they contact a mortgage professional like me, and we basically sit with them, we assess their financial situation, whether they have, what income they have, what assets and liability they have. Once that assessment is done, we complete an application, we check their credit score and credit rating, which is very important. And then we kind of go through the lenders who can approve their mortgage. And once we have an approval for mortgage, we get a commitment. We share that with the client. And the commitment usually basically say how much mortgage they approve for, what rate, what term. And based on that, we kind of work with them. And they go to the lawyer, they get their mortgage loan signed. And that's it. It's not that difficult.
Okay. So if you were going to get a mortgage, do you need to go get a credit report, or do I just come in with my ID and everything?
So when you come in, basically you bring your ID, we need your social insurance number, and you need to just sign a consent, and we pull a credit for you. Because a credit report is very comprehensive, it can be confusing. So I think a lot of people don't understand what it involves. So as a professional, we are trained to review the mortgage credit report and kind of go through it, the score means, what the different balances and rating means.
Okay, so I come in and bring all my info. I got my ID, so I don't need to bring any bank information, nothing.
Not at that time.
No, we're just doing an initial...
We're just doing a discussion. We're understanding what you have, where you work, what information you have. And based on that, I will basically tell you what I need. And once we have that information, then you can have time to pull that out.
And I guess you would like myself or whoever I was with to come in, rather do this on the phone. Is initial get together?
It's very flexible. I can do initial on the phone. I can gather all the information with you, and we can kind of start the application. We can, through email, you can sign the application, but I can also come and meet you wherever you will feel comfortable. But it's not like a standard, like you have to meet me at that time, because we can even meet at the time when the mortgage is approved, at the time of the signing.
And so the first time we meet, is it how long approximately would be?
It will be 10 to 15 minutes, maybe half an hour, depending on the situation.
So I guess what another great question that people might ask you, it probably comes up all the time, right? Is what's the difference between a variable and a fixed mortgage?
Okay, so fixed mortgage, basically your interest rate and your payments are fixed or constant during the term of your mortgage. It doesn't change with the change in the bank rate or prime rate. With the variable rate, your payment fluctuates with the rate in the prime rate. So you might get a variable rate which says prime rate is 345 minus 1%, which is your discounted rate. So your rate will be 245. But if the prime rate goes up to 360, your variable rate also goes to 260.
So basically, if there's ever a change in the, you hear, oh, the Bank of Canada increased the 25 basis points.
Yes.
Then it'll affect you if you're variable.
Yeah, because your discount rate is based on on that rate. So it changes.
Right.
Yeah.
And then most people will say, well, what should I be on? Should I be on a fixed or should I be on variable? But
it all depends on people's situation. Some people don't like to see that change, and some people are okay with that. So if you're not comfortable with the market moving, I think you should go in with a fixed rate. But if you're okay, because you can also set your mortgage payment at a percentage, and then it's okay for you.
I know in the last year or so, there were talk of like there's going to be, we were already at the bottom of the barrel for interest rates.
Yep.
So that was a great time to go to a fixed rate. And because you were thinking it was really low, the rate. So you go, it's only going to go up now.
Yeah.
So lock it in. And
yeah.
look, in the last, 6 months, there's been a couple of rate changes already.
Yes.
So
Yeah,
I
so
guess
a lot of people are locking into fixed rate because they don't want to see the interest rate going up and then they can't make their debt payments. And it will be not good for them.
And everybody, you can breathe, because when you're going to see someone like Meenu, she's going to explain variable and fixed, so don't worry about it, right?
Yes.
And then you'll make a conscious, informed decision best for your situation.
Yes.
Oh, okay, there you go. So I'm already relieved.
Good.
What other things we're talking about? So what are the costs involved in a mortgage process? Someone's going to get a mortgage, right? And they just say, I would need to get a mortgage. What costs do I have?
So there's no cost to the person who comes to me for a mortgage because we get paid from a lender for doing your mortgage. So there's no charges to you. There is a charges in case we have to go to a lender and you cannot qualify for a certain kind of lender, but some lender charge a brokerage fee or a lender fee, then I'll tell you that. But it varies by situation. Most of the time there's no fee.
Okay. What happens if I don't qualify for a mortgage? Am I gonna have to go rent? Or can you still help me if I basically don't qualify for a mortgage?
Yes, we can help you, but it takes some time and some discipline. So first we have to know what's the reason that you didn't qualify. Was the reason that you didn't have enough income, or your credit score was not very well, or you didn't have enough down payment? Based on those answers, then we kind of help you through it. If the credit's not good, there's way to get out of that ditch, and we can improve your credit, but it may take some time and some discipline. But once we have you on the right road, then we can apply again, and you can get that mortgage.
Now, is there, but there's other options, I hear, that if I don't qualify for, say,
The bank?
an A lender.
Yes.
Right? That's your typical, say,
Yep,
Bank of Montreal, TD Bank, CIBC, and there's other avenues for myself to get money if someone's in that situation, right?
Yes,
so what are those other avenues?
Yeah, so if the A lender do not approve you, we have B lender who may take a higher risk. And that's when I was talking about the cost. So there might be some extra cost associated with that.
Right.
But if you already have a dream setup that you want to get this house and you're okay to take that extra fee, then there's B lender. We also have private lender, which may charge you extra amount of interest, but they won't be checking too much of your credit or other detail that A or B lender will be checking. So those options are available.
Oh, okay. So I guess if you need to get money, but it's getting harder, it might cost you more to get that credit line.
Yeah, and that's where mortgage professional will help you. We will assess you how much money you will be making, whether you can afford to pay it, to make sure that you don't get into debt. So, but there's a short-term situation and there's a long-term solutions.
Okay, so what else do we have here? Here's another question. Are there any ways to strategize my credit to obtaining a future mortgage?
Absolutely. If your credit, you want to make sure that your bill payments are made on time, that you're not making any late payment, because if you're making late payment or you're not making those payments on time, it goes to collection agency. Every time something goes to your collection agency, it goes against your credit score. So you don't want that to happen. You want to make sure that you don't take 100% of your credit. You basically utilize about 75% of the credit, because lenders don't want to see that you're getting to too much debt. You also want to make sure that when the payments, getting to too much credit means you're not applying for too many credit cards, because every time you apply for credit card, it goes against your credit. So you have to make sure that you only get credit when you really need to have credit, and you make payments on time. And if you work through it, your credit score will be wonderful.
So let's say I have car payment, credit cards. Should I consolidate some of those so my credit will look better?
Yes.
And maybe delete some of these minor other monthly charges and make what's an idea that I could do? Should I put that on a line of credit?
So most of the credit card have about 19.99%, which is a high amount of interest. If you have a home and you can get a secured line of credit, why not take that and use secured line of credit?
Just pay those through that way?
Through that, consolidate them, and it's easier for you. Even the car payment, make sure the car payments are like, if you can make through your line of credit, which is cheaper, then it's okay. Otherwise, you throw the dealer.
So instead of going to my credit card for some of these, or if I have credit card payments that are getting behind,
yeah,
maybe pay them off through a line of credit.
Exactly.
So it'll free up my credit and it'll look better.
Yeah, because most of the line of credit, if it's a secure home line of credit, it's basically prime plus 1, which could be 445. But your credit card is about 20%. So you will be saving that much of interest.
Okay. So consolidate as best you can.
Yeah.
Make yourself look better so she can help you better.
Yes.
Okay. What other mortgage products do you offer?
So we offer the first and second mortgages that I talked about through various lenders. We also have private mortgages. We do home line of equity and a reverse mortgage, which is a new trend for people who are over 60 and they want to use their equity to make their monthly payments. So it's basically a reverse mortgage, means a lender is paying them on monthly, so they can use that money towards their expenses.
I see those commercials with these reverse mortgages, and it's like,
becoming
come
very
on,
famous.
Is this real?
It is real.
So it is real. People are using it. It's not some crazy idea.
No. It's a complicated thing though. So it depends on a person's situation. So not everybody can qualify based on your home equity and your age.
So it's a reverse mortgage mostly for a certain age group?
Yes, a little bit older. Yeah.
Okay.
Not you and I yet.
This is what happens a lot. People are looking for a home, you know, and they basically have met with a mortgage broker like yourself. You've secured a rate for them.
Yeah.
And they say, okay, you're pre-approved for $500,000.
Yes.
Now let me know when you find a home, when you're going to purchase.
Yes.
And what happens is you're looking, you don't find the right house, and 3 or 4 months go by, and you're getting, oh my God, I met Meenu like 4 months ago. Is my rate still secure? They're just going to increase another one. Oh my God, what's going on?
Yes.
So how long is the rate secured?
So the rate usually is secure from 90 to 120 days depending on the lender. But if you're in a situation where you haven't bought the house and the 4 months coming to expire, approach me and we can maybe do another pre-approval for you. Because the pre-approval is only up to the certain time. If that time expires, the pre-approval doesn't last.
So if we met like 119 days ago, and I'm only prepaid for 120 days, and they haven't increased the rate, I can just meet with you again and you can renew it?
We will have to do the file again. If in some cases it can be renewed if the rate hasn't changed. But most of the time we just have to do another pre-approval again, whatever the rate is.
So the rate hasn't changed. We're good to go for another 3 months. We've met, you extended it, and we're good. Sometimes situation changed. At 19 days ago, you gave me that you have this much income, but now things have changed. You have lost your job or something else happened. So pre-approval means we have to reassess everything. Okay.
And at that time, we'll have to give you pre-approval again.
We met 3 months ago, I haven't renewed it, so it's going to expire. It's at the 119 days. And they just changed the rate. The rate went up 25 basis points on the 119th day. And then I'm like, oh my God.
So I can't promise you that. I can try to renew at the same rate, but it depends on the lender's policies. It's not my policy, it's a lender's policy.
So if within that time period, actually, that was a bad example because 119, I'm still covered. So let's say the 121st day, the rate changed, and I'm like, oh my God, the rate changed, and I think my pre-approval just ran out. So then I got to go back and say, is there any way you can grandfather me in, or is it you're done?
I can try.
She can try.
I can try, but I don't make promises because, again, it's not my policy, it's a lender's policy. Sometimes they're okay.
Right.
Depending on lender, and sometimes they're not.
Pre-approval is only good for so long, what you're saying. And if you want to be proactive, then keep meeting with you and keeping in the loop. If you don't want to lose out on these rate changes, because they've been happening a lot.
It's been happening a lot, yeah.
So when do you think the next one may happen?
Nobody knows. I don't have a crystal ball. I wish I can tell you.
That's the thing. Nobody knows.
Nobody knows.
Nobody knows. What changes in the mortgage industry do I need to know about? Because I know there's been a ton of mortgage changes in the last year, and it's quite overwhelming.
I think the biggest change that happened was in January 2018. So in January 2018, OSFI, who basically regulates the financial institution, came with a rule because Canadian market debts were increasing. So they added this new stress test, which basically tell financial institute to stress test people who come for mortgages or refinance. So even if they're making a 20% payment or more than 20% payment, they have to be basically reviewed at whatever the rate they qualified for, let's say contract rate. So they qualify for 345. They have to make sure that they can qualify for 545, so an extra 200 basis point. But if you qualify for 269, for example, they still have to add whatever the grader of, whether it's the Bank of Canada benchmark rate or the contract rate plus the 200%.
If your rate is 2.69,
Yeah.
you add 2.
So it will be 469.
So it'll be 469.
But then they have to look at the grader of whether the Canada benchmark rate is 534. So they have to qualify for you at 534. So what they are saying is that if the interest rate in the market goes up by 200 basis point, can you make those debt payments? So they don't want people to be taking too much debt, and if the interest rate is going up, that they can't make those payments. So that's basically stress testing.
Just to ensure that you can afford
Afford
it,
to.
just in case. So
Just in case the market
yeah,
rate
it's
goes
just
up.
an added protection for everybody in the
Everybody.
industry.
Yes.
So you're not paying the crazy 5.34.
We just have to make sure that
It's only if you could handle that rate, and they qualify. That's how much they determine how much mortgage you could get.
Yes.
Oh, okay. So it's the greater of the two.
The Bank of Canada benchmark rate, which is 534 right now, or your contract rate, that whatever you qualified for, plus the 200 basis point.
Okay, so if it's 269
Yeah, plus
and
the
it's 534, which one am I going to be qualifying?
534.
Because
that's the greater of.
It's the greater of. So you're always the greater of.
Yeah.
So if my contract rate was
4%,
3.5,
Yeah.
then I would be basically getting the
Five
bank
and a-
rate because it's cheaper.
No, 5.5. So you'll be getting 5.5, whatever. You will be
Oh,
qualifying
you qualify
for the greater of.
the greater of, whatever it is.
Even though you'll
Oh,
be making
okay.
payments on your contract rate.
The greater of.
Yeah, the greater of.
Okay, so which would it be, 5.5?
Yeah.
And I'm like, well, but the bank rate's 534. No,
Yeah.
it's the greater of the
But
two.
you're not making payments on that.
No, you're just qualifying
Yeah.
how much you can afford.
It's just to stress test
So
you.
instead of qualifying for 500,000, you could now only qualify, say, for 400 or
Yeah.
something.
Yeah.
And it's it's not as easy as anymore of getting money. That's
No, it's
everyone
not.
thinks before, like 4 or 5 years ago, you just like, oh, this rate's cheap, this rate's cheap. I can pick and choose wherever I want. They're going to take me because I'm a customer. Doesn't work that way anymore. Now you really have to work with
I think
somebody.
that's what happened in the market because people were taking too much debt. And
Yeah.
if any recent study you see, Canadian has taken $1 trillion of debt, so they're trying to avoid that, where people get into bankruptcies, they can't make the payments, or the subprime mortgage, where people start going to the other side.
Okay, so they made it a little more easy. I think I can
I hope
sleep
so.
better at night. Hopefully you guys can sleep better at night. But you know what? If you have questions and you want to comment in it, leave a comment in the description here in the video. Leave a comment, like the video, and then we can reply and can pass that on to Meenu, or just send her an email or question yourself. If you want to get in touch with her, all her information will be in the description of the video. She's in Markham. She is mobile. If you are in Sudbury, she may come see you. Maybe you might get somebody from Sudbury.
I'll bring Steve with me for a road trip.
So anyways, thank you, Meenu.
Thank you for having me.
Yeah, see, people like these type of videos. You never know. They get some information, and they're probably sitting at home. It's like, yeah, we're going to get some info on a mortgage, and they say YouTube it.
Yes.
And that's how people connect.
Yes, totally.
Right? Yeah, so who knows? So hopefully you help somebody with some information. But you know what? There's so much, remember? It's not a simple thing. So you really have to sit down with someone like Meenu, a mortgage broker, and just ask the questions and start somewhere, because it's not getting any easier, right?
Yes, thank you,
When's
Steve.
the rate changing?
Too funny.
When?
Do you want the rate?
We want to know. Nobody knows, okay? That's the way it is. But anyways, get prepared, right? Get prepared and collect all your information when you go visit
We'll work
Meenu,
together, yeah.
and guide you through the way. So anyways, thank you for watching. You guys have a great day, and live life loud, everyone. Cheers.
Cheers. Bye-bye.
Save your money.
Save your money.